Right now, we're seeing one of the biggest financial revolutions that we've seen in at least 100 years, and this potentially could be our one generational opportunity to amass wealth, having a similar opportunity as someone investing into the S&P 500, whereas even back then, investing a couple $1,000s is worth well over $1 million now, but the opportunity in crypto could potentially be even bigger. Even though it's pretty simple to understand, I've been trading for over 8 years and investing in crypto for over 6, and I can tell you that it's actually easier to understand crypto investing than you might think as long as you know the basics. But the truth is 99% of people either aren't paying attention or will get involved way too late and the opportunity will already be over. But for you, the 1% who's actually taking initiative in watching this video, there's going to be many people over the next 10, 20 years that even starting with a small amount of money will have the opportunity to turn into millionaires. So this video is going to serve as a simple boiled down cryptocurrency investing lesson where I'm going to try to simplify everything that I've learned over the past 6 or 7 years. So I'm first going to explain to you the basics of crypto and why I truly see it as a huge investment opportunity. Then I'm going to share with you key crypto terms and fundamentals that are going to be critical for you following along and engaging in the crypto market. Then I'm going to share with you all of the crypto tools that I use to actually buy, sell, organize money, and interact with the markets itself. Then I'm going to show you how to do simple but effective fundamental and technical analysis that's going to put you miles ahead of other people that are looking at individual investing or crypto investing as a whole. Then at the end, I'm going to show you various ways to actually make money in the crypto market. I'm going to show you what I do on a daily basis with my trading and my investing and more. So by the end of this, you'll have a simple foundation to get started investing the right way, to invest like the 1%, and hopefully have the opportunity to join that millionaires club. If you have friends that you want getting involved in cryptocurrency and you find value throughout this video, make sure you share it with them. Like the video if you find value as well. The more people we can get this out to, the more we can establish wealth in the next generation. And that's effectively my entire goal in doing this. So let's dive in. All right, so let's first get into the basics of crypto and understand what this entire market is used for. So whenever you hear cryptocurrency, it comes from cryptography, which is a way of encrypting data to be stored in transactional ledgers, which is going to allow the transmission of information seamlessly, securely between parties. There's a bunch of different use cases for different cryptos, but the main premise of cryptocurrency is essentially having a starting point where it's either a transaction or a submission of information, and then a transaction is distributed via a validation cryptographic hash, which is sent into a distributed database, where basically this database is confirming the input of the information, and then once that information is confirmed and stored, and the transaction is committed and stored in the blockchain, the facilitation of that process is paid out, and then it hits the final point of the transaction. This can be all programmed and doesn't require a centralized entity, rather a distributed network of people all using this network that are securing the network without it needing to have this central entity, like I said. So there's a few major use cases for cryptocurrency that I think are important to understand. The first of which is a store of value. So of course you've probably heard of Bitcoin. This has a finite supply where you can see something like the dollar is just continuing to be printed over time. Something like Bitcoin or something like gold, for example, it's really hard to create more of it, in which case this becomes a very good store of value opposed to the dollar that just continues to have more and more of it printed whenever the Federal Reserve decides, which is actively degrading the value of your dollar over time. Okay, we're going to get more into that in a second. All right, but that's a store of value is one of the biggest use cases for cryptocurrency. Okay, the second biggest is something called DeFi, basically being able to program automated systems to distribute money where, like I said, with this example, there's a network of validators confirming the transactions, confirming the information, and being able to program the distribution of funds, transactions, all sorts of things that are being done by humans right now that don't necessarily need to. Okay, so programmable money, speed and accuracy and accountability of all these transactions. The third biggest is stablecoins. So representations of a relatively stable value. So stablecoins are coins that are mirroring the value of, say, the dollar or the yen. All right, so something like USDT is a one-for-one cryptocurrency version representation of the dollar, which allows you to essentially take the worth of a dollar and use it on blockchain to do any sort of trading on the blockchain using cryptocurrency. So examples of that, USDT, USDC are some of the big ones. You can see there's other many use cases and applications for blockchain. So finance, we can have our government processes automated, cybersecurity, cloud storage, global payments. We're already seeing that with XRP, potentially replacing the SWIFT system, insurance, supply chain, real estate management, healthcare, healthcare, fundraising transparency. We're having the establishment of Doge now. So the future is already moving into a more clear, open, accountable way of actually seeing where collective funds are going. And blockchain, in my opinion, is going to play a massive role into this. There's a lot of use cases in crypto, but what does this actually mean with respect to the opportunity and the potential growth of the market? So I'm going to first talk about the store of value opportunity and then sort of the open-ended upside of the more crypto being integrated in terms of DeFi. So let's first talk about store of value, and then we're going to talk about the DeFi implications as far as the future potential. A lot of people stay away from Bitcoin and call it a scam or call it nonsense because of these big swings it takes. But in my opinion, that's only really because as human beings, we get excited when things become popular and things start working out. So as soon as there's these big moves up in crypto, this is where you start hearing about it on the news. And this is where people start to lose money, get sad, get upset, and have an emotional response to it. So everyone hears about it here and then calls it a scam here. Whereas we need to flip that on its head and look at what's really going on. And what's really going on is this is a chart of the purchasing power of the dollar over the past 5 years. We've lost almost 19% of the purchasing power of the dollar. And you can see as of recently, it's just got worse and worse and worse as the US continues to spiral into debt, with the interest payments of the national debt exceeding the defense budget for the US. And if we look over 10 years, you can see it's 25. And if we look over the entire history of the dollar, all we are doing is driving the value of the dollar consistently into the ground. So now let's look at the trajectory of this chart. And now let's look at the trajectory of this chart. And this is only over the past 7 years where we've had a 11,000% increase. And this up graph is essentially the exact inverse of the dollar graph. In my opinion, Bitcoin is simply a vacuum filling up all the inefficiencies, overprinting, and the issuing of money that's actively debasing everyone's currency. People, institutions, and others are starting to catch on to the fact that human beings need something that's not controlled by a centralized entity or a centralized country that we can store our value in, be able to exchange peer-to-peer without relying on a government, a stock exchange, or a dollar. And this here lies where the opportunity, in my opinion, is with crypto. All right, I like to look at this model which shows us the traits of money. We can see all of the metrics here that are the most critical, but in my opinion, scarcity, divisibility, portability, viability, and censorship resistance is the most important traits of money. And where the opportunity lies right here is having a low metric. If we look at gold, it's moderately verifiable, very low on the portability, divisibility also bad in. Okay, this gives gold a moderate scale on the scarcity. If we look at something like Bitcoin, we 100% can confirm that there only will ever be 21 million Bitcoin. We can also divide Bitcoin up however fractally we want. It's extremely portable. I can send it across nations. I can send billions of dollars and spend $12 doing it and have it done in about 15 minutes. It is the most verifiable form of transacting. And if we look at other things where gold is not programmable at all and is basically not decentralized at all because governments are using it, as well as most people that are investing in gold don't have gold bars in their bedrooms or under their bed, right? They're holding ETFs, which have counterparty risk because we're now relying on a centralized government to purchase the gold or say that we have gold representations in ETFs and we're holding it against a dollar. Whereas if all that collapses, you don't actually own any of that gold. That is not true with certain ways of investing in Bitcoin, which is where this becomes the major key. The established history is low on this, which gives us that upside as a better potential alternate to gold. Right now, Bitcoin, even though it's climbing, is still worth only $1.8 trillion, which puts it at number 7 in the largest asset in the world, whereas gold still is 17.6 trillion. So if Bitcoin were to even achieve the same level as gold at any point in history, we're already looking at a 10x in capital, and Bitcoin being at about $1 million per token. Okay, and if we look at Bitcoin in terms of global capital, there's an estimated $900 trillion worth of global assets, and still Bitcoin is only $1.8 trillion, which is only 2% of the global wealth. If we look at it in terms of global trade, even if Bitcoin were to be able to take 10% of the global trade, this could shoot the price of Bitcoin up to $2.9 billion, which would give us a total market cap of 61 trillion. All right, and by 2045, based on the current rate of inflation, the global asset market will be about 4,000 trillion, in which case, even if Bitcoin has 7% of the global capital share, we're looking at a $280 trillion market cap for Bitcoin, which if we look at it in terms of market cap is about 150x in price from what we are at right now. All right, and in a scenario like this with a $280 trillion market cap, that would be 133x in the price of Bitcoin, bringing it up to about $13 million per coin. So even if you invested $5,000 now, all right, in this scenario, you'd have $665,000 worth of capital just off of that one position alone. And for example, if Bitcoin is to make up, say, 20% of global trade and a larger percent of the GDP. Some models are showing by 2050 a price of $52 million per Bitcoin. So I'm not here to say that this is exactly 100% what's going to happen. My point is there's never really been this open-ended of a technological shift in humankind where everyone across the board has had such easy access to the technology. All right, and seeing a model like this where the money is programmable, open source, where all of these nations, corrupt or not, the citizens have access to storing their wealth in a communal global ledger, this could be one of the most pinnacle shifts in money that humans have seen in the past thousands of years, and it's all being presented right in front of us, and most people are just calling it a scam because they don't really pay attention to the cycles. Okay, so we're going to dive in way more, and I'm going to continue breaking down the opportunities, but this model is not that unrealistic. Okay, not only is this exciting for Bitcoin, but as Bitcoin continues to gain market share, if we look at the total money in crypto outside of Bitcoin and Ethereum during this process, okay, even in the last bull cycle, we saw $1 trillion worth of capital flow into other projects that are a lot smaller that have a lot of upside potential. And if we're getting into these timing the cycles correctly, okay, we can really position ourselves into high growth potential coins. Okay, so going back to the growth potential of something like the DeFi space, consider this programmable money where individuals, in order to validate transactions in the system, need to oftentimes own the native tokens themselves. Okay, and these can be used for lending and borrowing, keeping track of the value, ownership, and distribution of assets with tokenization. BlackRock is already doing this a ton. Insurance, asset management, okay, basically just programmable digital banking. The current financial ecosystem is built off of old infrastructure. Okay, integrating blockchain is going to speed this up dramatically, but it's going to happen over time and is going to require a significant overhaul. But there's already nations that are working on doing this, and in my opinion, it's only a matter of time before something like this happens. Okay, it would lead to faster settlement times, less paperwork, less red tape, record keeping that can't be destroyed, it can't be changed, it can't be hidden. All right, and if we look at it in terms of something like Solana or something like Ethereum, these major blockchains which deal with this type of transaction, you can see the Federal Reserve did $991 trillion worth of transactions. The SWIFT process did about $650 trillion worth of transactions. If we look at a company even like MasterCard and look at the amount of transactions that they did in 2023, they did 266 billion transactions in 2023, whereas respectively, Ethereum by itself only does 500 million transactions annually, in which case the native token is required to secure that network and to pay for these transactional fees. And you can see over time, the amount of tokens added to this transaction facilitation process has only been increasing. And for example, even if Ethereum did 20% of the transactional volume of Visa per year, the amount of tokens that would be needed in order to facilitate this as well as being burned would probably even 4 to 5x the price right off of what it is now, just with the added transactional volume alone. And if this technology begins to be used with all of this transaction facilitation, imagine the growth potential in this entire sector as a whole. All right, and so we can pair this up with cycle timing, cycle mapping, fundamental analysis, technical analysis. We're going to dive all into that, but I just wanted to explain to you the overall upside of this market, how most people completely don't understand the magnitude of this potential opportunity. Okay, so before we dive into the other stuff as far as setting up tools and actually getting into the market, let's talk about the key terms and fundamentals that you're going to need to understand when I'm talking about these things to really be in the know. I'm just going to go down this list and talk about each individual one. Okay, a private key, this is also known as a seed phrase, something that keeps your actual wallet on chain secure. So this is something that you never want to share. It's like a password to your bank account, right? If anyone has access to this information, they can have access to your entire wallet. Now, more importantly, this private key is what controls cryptocurrency wallets themselves. So there's something called an exchange. So this is like Coinbase or any sort of platform where you buy or sell or trade, even hold individual cryptocurrencies. Okay, you can also use it to deposit fiat money and switch the money into crypto. These exchanges hold your private key if you're using what's called a centralized exchange. So an example of a centralized exchange is something like Coinbase, where you can see you can deposit and withdraw cash, which can connect directly to your bank accounts. But Coinbase still owns your private keys. So any crypto that I own on Coinbase is actually owned by Coinbase with a contract to me that I technically own this cryptocurrency. But there's a saying in crypto, if it's not your keys, it's not your crypto. So centralized exchanges really hold your private keys and hold the crypto for you. Okay, a decentralized exchange is a peer-to-peer marketplace that allows cryptocurrency to be bought and sold amongst each other, actually on chain. You hold the private keys, and when you're trading things, you're trading it on the blockchain, and that cryptocurrency that is in your wallet with your private key belongs to you. Now, there's pros and cons to this. Decentralized exchanges are more secure if you hold your seed phrase. All right, but if you make a mistake or you lose a seed phrase, there's no way to recover it. Whereas the exchanges, there's there's the support, there's passwords, there's recovery. A lot of times they warn you before sending funds. So there's trade-offs. Tokenomics are basically the study and analysis of the economic part of how the tokens move inside a project. So think about how a company works, where there's treasuries, there's payouts, there's preferred shareholders, there's different sort of things going on. That's tokenomics. So we can see coin allocations, unlocks of coins, and we can see when this is going to happen, all the distribution of where money actually sits. This is what's referred to as tokenomics. You can oftentimes read about it in the white paper as well. All right, the next term is market capitalization, which you can consider the total size of the project or how much money is in total in these cryptocurrencies. Okay, and market cap is calculated by the individual price of the instrument by the amount of shares that are in circulation. So if we look at something like IronNet, we can see that the total circulating supply is 128 million. And if we multiply it by the current price, that gives us 378.8 million, which you can see is pretty close, give or take, the $380 million market cap that it currently has. All right, and so this is sort of how we determine how risky or not a cryptocurrency is, as well as the general size of a cryptocurrency. So whenever we're saying large cap crypto, this is anything with a market capitalization over 10 billion. All right, so basically any of these coins here that have a $10 billion market cap and over are considered to be large, fairly secure cryptocurrencies. Mid cap is between 1 billion and 10 billion. Small market cap is between 1 billion and 100 million. And then micro cap is anything under 100 million. So a good way to sort of visually understand market cap, say for example, these are our shares that are available in the open market. We have 1, 2, 3, 4, 5, 6. They're all at $10. We would take 6 of these units times $10, which would give us a total market cap of $60 for this entire project. Now, total supply means how many tokens are created in general, because the circulating supply, which is used to calculate the market cap, is different from the total amount of units that can be created. If we look at Solana, this is the total supply, this is the current circulating supply, and the max supply is uncapped. So Solana can essentially create more tokens whenever they wish. But if we want to find something called FDV, which shows the total market cap of the project if all of the tokens were put into circulation, that would be using the total supply in place of the circulating supply, which would give us something called the fully diluted valuation. So this valuation is sort of used to see the bigger picture of the valuation once everything is done in the project's plans. All right, and the difference between the market cap and the fully diluted value, we call the FDV ratio. So it depends on the utility of the project, but oftentimes you don't want to see a massive gap between these two values because there's a higher risk of dilution, which is basically when more tokens are added to circulation. Okay, so in this situation, if you were to just double the amount of tokens, okay, that's not adding any money to the market, which would then take the current $10 valuation and turn it into a $5 valuation for each of these tokens. So if you hold a certain amount of tokens, so now your tokens are only worth $5. All right, so these are sort of the more fundamental metrics to understand here. On a more technical front, whenever we're saying trending, the key characteristics of a trend are as follows. We need a high, a low, a higher high, and a higher low. Okay, and this is going to give us an uptrend or be bullish. All right, the same is true for a downtrend, but in the opposite. Okay, we need a low, a high, a lower low, and a lower high in order for this to be a downtrend or bearish. The term altcoin is essentially just anything that isn't Bitcoin. A lot of times there's just an annotation of altcoins being smaller, more speculative coins in crypto, but technically it's just anything that's not Bitcoin. All right, smart contracts are programmable contracts that can do certain things on chain once certain input or output criteria are met. And this is sort of going back into how you can program money and program automation into a financial infrastructure. And then the last term that I want to cover is gas fees. So gas fees are basically whenever you're using a blockchain like Solana, Ethereum, Polkadot, these chains, in order to do transactions, cost money. You pay those transactional fees in the native token, and this is called gas fees. Okay, so anytime you hear gas fee, think of it as a little bit of the tokens that you need to pay on chain in order to make the trade happen. These are more degen sort of concepts that I do want to cover because this is sort of how people talk in crypto. If you go on crypto Twitter, you get into the meme trading space, right? This is really the verbiage that's getting flown around. So there's a lot of money in this, so it's really important to also know this terminology. Whenever someone's saying hodl, it's hold on for dear life. It's basically holding on, not selling, even when there's fear or confusion rather in the air. Hodling is just holding on for dear life. Okay, FOMO, fear of missing out. It's not only a crypto thing, but a lot of people will FOMO into things. If someone says I FOMO'd in, it means that they're just getting in because they didn't want to miss out. Whenever someone is saying FUD, okay, it's fear, uncertainty, or delusion, right? If someone says, oh, I FUD'ed that project, it means that you talked down on it because you were concerned about it or you didn't believe in it or you were buying into the rumors of it not being good. Or if there's FUD on something, it's the same thing. A whale is a large investor. Okay, so there's different metrics to calculate the size areas of, what constitutes a whale. Okay, whenever someone's saying a rug, it's basically a scam, right? Anything where the founders of a project are basically screwing over the buyers of the project, whether it's dumping on them or lying to them or whatever, that's what a rug or a rug pull is considered. Okay, degen is basically either a person or an idea where it's a degenerate, right? Where you're not putting a lot of thought, or maybe it's an overly risky decision that you're making. That's usually called degen in crypto. And then if you're saying ape is another term of just throwing money into something or making another irrational decision or just an erratic decision, right? If you're aping money into something, people say, oh, I just aped into this, I aped into that. Like, you're just kind of going in without thinking. So that's sort of the non-professional degen version of crypto. All right, let's get into section 3, which is going to be all of the crypto tools that I use to be able to buy, sell, organize, and interact in the entirety of the crypto market. Now, I think this is where a lot of people get lost. They're like, what platform do I use? How do I get money on there? Where am I taking trades? How does it all work? I wanted to build this mind map and sort of show you the interfaces a little bit, show you how I move money in my crypto ecosystem. And hopefully this will add clarity if you're new or if you're just looking to get to the next level. This is certainly not the most advanced, right? I'm primarily a perpetual futures day trader, right? I invest in crypto and I day trade. So like, I'm not in the trenches of doing meme coin research all day, where I know there's a million different like tools and different stuff. I'm just showing you the normal person. Like, if you have all this stuff, you're basically doing it right? And then if you want to take it to the next level, by knowing this, you'll know enough to go and do the rest of it. But this is like the foundational layer of, in my opinion, like what you need to get started. Okay, so let's do a top down. Let's look at all of it, and then I'm going to get in and show you sort of how I use each one. First process of trading or investing in crypto is basically funding wallets, right? And so getting money on and off of exchanges, whether it's centralized or decentralized exchanges, is going to be considered an fiat on and off ramp. So whenever someone's saying fiat on and off, basically just getting money, turning it into non-fiat, which is crypto. And so there's several ways you can do that. So what I do is I always move money into crypto from Coinbase, right? Coinbase is connected to my bank account. That's the primary one way that I move money in and out of crypto, so that I can always know how much money is actually being made and lost and moving into the markets. If you start depositing money from different areas, right, you can use something like Phantom, you can use MetaMask, which are both decentralized options, or you can use, for example, like I'll day trade on Bybit or Blowfin. These are all options where you can deposit money on. I like to use a centralized exchange that is connected to my bank account that is legitimate, and that's how I bring money into the system. All right, so this is sort of my home base as far as crypto is concerned. Like I said, you can use other decentralized wallets. I'm only using MetaMask and Phantom, okay? And what I would recommend to you guys, I like to use Safari normally as a browser, but anytime you're trading crypto, you're better off opening Chrome. And what you can do is every time you get these cryptocurrencies, these will actually show up as Chrome extensions. So you'll see I have Tau, Kepler, MetaMask, Phantom, Polkadot. I got the Terra Station Chrome extension. Okay, but you can have all of these Chrome extensions, but basically you'll be able to pop these open, and anytime you're on a website, you can connect your wallets to those accounts to be able to have interoperability between that site and the wallets that you have. Same thing with the Phantom wallet. Phantom I use for trading Solana tokens, and then any other chain I'm using MetaMask. All right, so that's the way of getting funding secured. All right, from here, there's different types of activity that I'm doing. Now for short-term investing, these are coins that we want to hold for a short amount of time, whether it's just for one cycle or it's for, say, a few weeks or a few months. Now, depending on how widely available these coins are is going to determine where I like to trade these coins. Okay, if it's a larger, more mainstream token that's listed on a centralized exchange like Coinbase, if I plan to hold it for a short period of time, I'll have it on a Coinbase wallet. Okay, if it's a smaller, less known project, okay, I will keep that on a Phantom and a MetaMask account. Okay, now there is options to trade these as well on centralized exchanges that allow leverage. Okay, depending on where you live and the restrictions, just make sure that you're checking for these accounts. But these accounts will also allow you to use, say, 30x, 50x leverage on some of this investing. The reason I don't like to use these for investing is because these are cryptocurrency exchanges in different countries where the regulations standings are always changing. And in my opinion, I don't leave any significant balances on these accounts, okay, because I don't want to have my access pulled from these investments. Okay, if I'm investing in something, I want access to my wallet, or if it's simple, I'll keep it on Coinbase. For long-term investing, things that I'm holding indefinitely, like for example, Bitcoin, I have zero plans to sell any of my Bitcoin until 20, 30 years down the line. Okay, now I do have some of my shorter term holdings that I plan to take some sells on in Coinbase. But what I'm doing is moving my long-term holdings that I don't plan to move around into what's called a ledger. And a ledger is something called a cold storage wallet, where basically your private keys are put into what used to be a thumb drive, but it now looks like there's way fancier versions of it. Okay, by the way, this is not sponsored anything, probably should be. This is just a good brand that I personally use. Okay, a lot of people think that your crypto is actually stored on these wallets. It's not. This is just holding your private key. So if you lose this piece, all you have to do is make sure that you have that private key seed phrase. As long as you have that, you can get a new one of these. You can punch it in. That's going to grant you access to the on-chain wallet, but no one can hack it or steal into it unless they have that seed phrase, which makes this the most secure long-term storage that is not attached to a centralized entity at all, like a centralized exchange. And that's why the long-term money is being parked in things like this. Okay, I have an old Ledger account open here that I don't use anymore, but just to sort of show you the functionality of it, we can send and receive, you can stake tokens on here, you can buy and sell, but this is probably the most secure way of actually holding your long-term crypto. So I'm using these two for the long term. And then for day trading, like I said before, in order to get access to leverage and the functionality to be able to take short-term trades for temporary profits, this is what I spend most of my time doing when I'm not just investing in the market. This is where we have an entire private team working on these day trades. So for example, I can use this, which is an exchange interface, to be able to take even a position where if I think the value of Ethereum is going to move down over the next 30 minutes or so based on a strategy in a repeatable pattern, I can enter the market like I did here. If we play this forward, you can see that was the perfect timing before the market dropped off. I'm up $1,400 here, $1,600, $2,200. And this is where I take my position off for about $2,200 in say 30 minutes of time. So a lot of people on the private side of our trading team that are learning how to do this are making 8x what they're risking on their trades. DC, big shout out to DC, 800% gains on his trading account. Okay, so starting with 1,000, you'd have 8,000. If he does it again, he'll have 64,000. Then he can scale this, distribute it into investments. Our overall goal is to get people invested in learning how to trade and learning how to create income generating machines from themselves in crypto. Okay, we just had a class today actually with like over 100 of our private team members. All right, and I just love getting comments like this. The past 2 to 3 months with you guys has helped me more than anything else. Thank you, Craig, John, I'm Fancy Joe. Basically just showcasing that what we've done has helped him dramatically. So yeah, I love seeing all the games. Project Mayhem making $7,000-8,000 in single trades. So in order to do that, okay, I'm using Bybit or Blowfin. Blowfin has a little easier accessibility. Okay, if you're interested in using these exchanges, I have partnership links in the description of the video. Make sure you read the terms and conditions as well, but this is what I'm using to facilitate the day trading that we're doing. All right, so the normal flow of capital is basically going into a Coinbase account, being sent over into a Phantom or a MetaMask, a Coinbase, and then funding either or of these accounts to do trading. If I'm doing a long-term investment, normally it will start over here in Coinbase, and then I'll send from Coinbase over into a ledger, and then the funds on the day trading here live independently to themselves. Okay, so if I want to fund money into something like a MetaMask, I can first deposit funds into Coinbase. Then once I have money on my Coinbase account, I can basically take that money and trade it to buy Tether. So I can submit that order. Then I'll have Tether. Then if I want to send cryptocurrency, I can hit send. I would click open this receipt. Okay, you submit Tether. Then you'd click open, go into your MetaMask over here, paste your wallet address, paste it into here, preview send, and then you'd be able to have money in your MetaMask. The same thing is true with Phantom. Once you download this in your Chrome extensions, you can go into Phantom, open up your wallet. Now there is one thing to note, Phantom is on the Solana network, so make sure that the coins that you're sending are on the right blockchain. Okay, so you'll see there's options for all different blockchains. So what you want to do is make sure you're not sending funds from one blockchain to the other because you will lose all of your funds. It's happened to me. I've lost $5,000 just making an error sending to the wrong chain. So you want to make sure that you're sending on the same chain. So if you have USDT on Ethereum, you can see all the blockchains are right here, and you need to send this over to USDC, for example, on Solana, you're going to need to do something called bridging tokens. Okay, so this is basically taking stable coins from one blockchain to the other. Now you can do this natively in MetaMask. Okay, so you can connect your wallet. You can select from, for example, Ethereum and go to whatever network that you're looking to go onto. But what I'm using for the Solana network and switching coins into USDC is something called Allbridge. This is basically to do that exact thing. So you can click on swap stable coins. You can then connect your wallet via MetaMask right here, connect your Phantom wallet to get USDC on Solana. So you can easily switch between Solana and Ethereum or any of the other chains by either using MetaMask's bridge or by using Allbridge. And what I would recommend for you to do, I do this on Google Sheets, but you can do this on Notion or whatever, is just create an activity log where you take a note of what you did. So transferred 5K from bank to Coinbase, put the date, and then you can paste the wallet address in here. And this is just going to give you dates, actions. And then once you complete a transaction, for example, then you can paste the link to the transaction here. That way you just have a running string of all of the different things that you've done in crypto, so that when it comes to the accounting portion, all right, you have this master list by date of all the actions that you've done with both of the wallet transactions and the transactional link. I promise you, it seems like a lot of work and annoying, but after a year and you forget all the stuff that you've done and you have to start paying taxes on crypto, you're going to be really, really happy that you've kept this log, which is going to sort of supplement the other thing that I'm going to show you in order to track your overall cryptocurrency. All right, so for utilities, we covered Allbridge. I'm going to cover Dex Screener and Dex Tools right now. So whenever you're placing trades using a Phantom wallet or a MetaMask wallet, you can use something called Dex Tools, which you can then go in, search up your symbol or your pair, or type in the wallet address. Okay, and this is going to show you a chart. You can go in here and connect your wallet. Okay, then you can go in here, and once you place a transaction, you can pause this. You can go into My Positions, click on Add Position, and it's going to pop up a position for you to be able to track your exact holding on any pair that you're trading. All right, and for Bybit or Blowfin, you can go over to your account. You can see you'll have access to the spot market. So if I click on spot, this is where I can place positions to actually buy the underlying asset. So I can click buy here, I can click sell here. But if I want to do any sort of day trading, for example, you can see we can come in here and you can see this is where we can have access to our different amounts of leverage, which is going to allow us to be able to trade on these smaller time frames and take those smaller trades like I showed you earlier. All right, the next utility tool that I want to share with you guys is something called Coin Tracker. This is something that I recommend for you guys to do immediately, as soon as possible. Just connect all of your accounts to this. And what you can do is use cointracker.io and connect all of your different cryptocurrency accounts. Basically, every single cryptocurrency account will be able to be connected into here automatically. What this will allow you to do is have your accountant, or if you just want to generate tax reports, you can generate all of your tax reports from all of your cryptocurrency activity. And this, in conjunction with the notes of what you've transferred back and forth, is going to make the accounting process so much easier for anyone helping you do your crypto taxes. It's going to take the headache off of things, it's going to add clarity. So this is really the tool that I use to aggregate everything together. So shifting over into research and organization, there's a few tools that I use to be able to find what's called on-chain metrics, as well as be able to do analysis and organize my crypto. Okay, so the first one that I'm going to go over is Glassnodes. All right, and this is a little bit more advanced. It's going to show you a lot of metrics that are behind the charts, that are a little bit more detailed on the tech side. Okay, what I'm using this for overall, I'm going to get to in the next chapter. Okay, but Glassnodes is what I'm using for a lot of my research. Okay, CoinGlass is a free, essentially, version of Glassnodes. So a lot of the similar metrics that I'm going to show you in a second here, you can find on that. Okay, TradingView is what we're using to do all of our charting. Okay, so this is going to allow me to look at overall charts of cryptocurrency and be able to draw different things and do different analysis on my charts. Okay, like I said, we're going to get into that in just a second. And then CoinMarketCap we were using earlier, but this is sort of the home base for me to be able to look at cryptocurrencies and sort of be able to find and research the first layer of different projects. So someone says, have you heard about, whatever, Aave, right? I can click on Aave. I can see, okay, here's the market cap, the volume, the FDV. Here's a quick look at the chart. We can see it in a candle view stick, or we can see it as a line graph, see what exchanges it's traded on. We can have access to the official website, the official Twitter, Reddit, all of the contract addresses here. So if we want to buy it, we can paste this into our MetaMask. We can see what wallets it accepts. We can see projects that are similar to this. There's oftentimes on this news tab here, all the relevant articles for the specific project. So this is sort of my main research tool that I'm starting at anytime I'm looking at any sort of project. All right, so if you guys are setting up any of this infrastructure and you want access to all these tools in one spot, I'm going to send you off all of the tools that I've used basically across the board. All you have to do is follow me on Instagram and DM me the word tools, and it's going to be sent over automatically for you. Let's get into section 4 and do some fundamental and technical analysis and take a look at how money is actually made in investing and trading. So before we dive into the details, first we should understand how money is actually made from investing. As simple as this may seem, this is sort of the bones of where everything starts. So say, for example, if you have an asset at $10, right? And you purchase one of these assets at $10, then with collective decision making, the price of each coin then moves up to $30 and you have one at $30. Now you've just made plus $20 times however many tokens that you bought in the first place. So this is the same way as it works with investing and with trading. So when you're purchasing, there's two ways to set up the initial risk on the position. So there's something called a stop loss risk, and then there's something called a liquidation risk. I call it a liquidation risk. So a stop loss risk is basically you deciding where you're going to enter in, say this is our $10 mark, and where you're going to sell it for either a profit and where you're going to sell it if you're wrong for a contained loss. Okay, and this is going to be considered 1 unit of risk. This is how you should be investing. A lot of people don't invest this way. I'm showing you the way that you should be looking at it. Okay, so this 1 unit of risk is how we're calculating something called our risk reward, meaning meaning the reward on the trade, say, is 3x the unit of risk. That's a 3-to-1 risk reward ratio. All right, so if we look at a chart of Ethereum, for example, this is actually a halfway decent trade idea. And this is sort of bleeding into like doing technical analysis, but I'm just going to run you guys through it and you'll start to understand this. All right, so if we have our trend levels coming up here, trend coming down here, this now has to pick one direction, either down underneath this trend or up over this high. Okay, so the way we could potentially start to build a position would either be off of a fixed stop loss. So if we want to enter here, if we're wrong and say it goes price breaks underneath this trend, right, this would be our contained amount of risk. Our reward would be up here, and you can see that's a 4.38 risk reward trade. So if I'm risking this amount and I'm right and price goes here before going down here, I'm going to make 4.3x what I'm risking on this trade. Okay, so this is an example of a stop loss risk. Now, if we look at this same exact opportunity, but you buy Ethereum, and this is what most people do, they're saying I'm risking off of this project essentially going worthless. So your stop loss would be placed at 0, meaning that the coin is now worthless. All right, so if we set our take profit to the same exact level, you'll see in this scenario, now we're only going to make 2x if we're right about this trade, where on this other trade, because we have our stop loss here, the risk is slightly higher, but our upside is now more than double. Okay, so this is liquidation risk, this is stop loss risk. And depending on how risk on you want to be, whether you want to hold the crypto no matter what, and the volatility that could come in the market, sometimes you want to take trades like this, sometimes you don't. So really for me, with things I plan to hold long term, I don't want the market coming down, stopping me out, closing me out, losing all my money just for it to then later on recover. So if I believe in something and want to hold it long term, I will use a risk off of liquidation. And if I want to take a trade on something that be a little bit more aggressive, I'll place a stop loss at a key critical level. And a stop loss risk is also what I'm using for my day trading. This is something that most people do not understand in trading or investing at all. Whereas regardless of the amount of leverage or whatever that you're using, the distance from your entry to your stop loss times however many units you enter with equals your dollar amount risk. All right, and so we've actually designed a tool to be able to calculate this for you. All right, this is also in the tools. If you want to follow and DM me tools on Instagram, I could share this with you. All right, it's called the Trade Position Size Calculator. You'll see as you open that trading view indicator, you can hit entry price, you can click on your entry price, you can click on your take profit price, and you can click on your stop loss level. Say you wanted to risk $5,000 on this trade, you would hit apply, and this is going to show you the quantity that you need to enter at this price, that if the price trades down to here and you close, this is your dollar amount risk. And this is the estimated profit on the trade if you're right. I usually do this math in my head for investments, but on a day trading front, I'm using these. You can see, for example, on this position, I used this where my stop loss was predefined over here. I was able to enter my position before the crypto made its way down. I had my profit up and then I closed out my position. So this is basically how I'm building all of my positions. All right, so let's dive into fundamental analysis. I'm going to show you some of the key things that I look at in crypto to be able to time cycles and be able to follow some sort of general idea to do fundamental analysis. Then we're going to dive into technical. First thing that you should know in crypto is that Bitcoin moves in cycles of 4. So every 4 years, the halving rewards get cut in half, in which case this is going to create shock supply to the system, which is why you'll see between these 4 markers, every 532 days for the past 2 cycles has basically been the exact all-time high. All right, you'll see in the middle of this cycle would still put us out into September of 2025. All right, so when I'm gauging cycles, you'll notice every time we have our halving cycle, there's usually a cool-off period. Just before the midpoint, we get these big runs up. So you'll see just before these cycles start, you'll see a little bit of a push and then a correction before a big move up. That's why last fall when we saw this move start, that signaled that we would potentially get our first initial push, followed by a little bit of a reset after halving, followed by a massive push in the apex of the cycle about 530 days after the halving. All right, and you can see this is exactly what we've been calling for the past 2 years on YouTube. I'm not making this up as a hindsight thing, okay? This cycle mapping is exactly what I'm doing in order to time my other entries on investments, because actually if you're doing this type of timing, you can also use something called the Bitcoin Power Law Corridor. Big shout out to Capricorn Investments. They made this indicator, but basically this indicator is showing us the Bitcoin chart's ranges of volatility based on a logarithmic chart. Now, this is just a way of looking at big data in a digestible form. When you switch to a logarithmic function, you can go onto your trading view and just click on this L here, and that's going to move Bitcoin into this logarithmic chart. You can can see as Bitcoin moves up, the cycle lows never really go below this green lower line. They always touch right off of it before making their moves. So at these cycle lows, once this green line is hit, that's the bottom of the cycle, right? This high red band here, each cycle has been touched. Because this chart is diminishing, right? We didn't hit this upper band here, but you can see we usually go well into this red zone, in which case now we're just at the midpoint of this chart, right? So even if we're going up to halfway through this, that's bringing us up to, I mean, in my opinion, 165, 175,000 using other technical analysis that I'll show you here in a second. But overall, if I switch out of this view, right, this can show me generally where we are in conjunction with the timing of the cycle, where we could expect the prices to move. And everyone thinks that they're geniuses because everything starts to pump when crypto turns on. It's basically about finding good investments that have good ideas that you can get in the ground floor of that will probably pump regardless because of this overall cycle movement, but then just getting into things that make sense based on the narrative. That's the reason why I got into Solana when I did, and I called this out for everyone. Solana was so beaten down, even though it was like the number 3rd chain at one point during the previous cycle, but it got wrapped up in FTX. Then the capital dried up, no one was talking about it, but the utility in the use case for something like Solana was extremely there. So I called out for an investment here, and you could see everything pumped in crypto, but Solana especially pumped like crazy, and this will probably continue into the cycle. I have a really good position. Okay, I'm already up 3, almost 4x on my largest non-Bitcoin holding. So these are the things you can start to do as your cycle mapping. Okay, another thing that you can do is use something called a terminal price. Okay, so I use Bitcoin Cycle Master here, and I go in and I just only leave on terminal price. I don't know why these always check back on. I only have terminal price back in, and this is this red line here. If you notice, every time a cycle has ended, right, it's not necessarily when it touches this red line the cycle ends, but a cycle has never completed without eventually coming in full contact with this Bitcoin terminal price. Okay, terminal price, it's a complicated equation that is used by companies to be able to judge the potential growth beyond calculation of different assets, in which case we can plot this over Bitcoin and we can look. So what the history is telling us is that at the very least, Bitcoin has to come up and at least touch this terminal value before having a cycle high, and should probably have a cycle high at this period. That would lead us to believe that we should see something along these lines. And in conjunction with the general growth thesis, this doesn't seem very out of line. So timing the tops is a little bit more difficult, and we can use other analysis on a technical front to be able to judge that as we're going. But basically, as soon as we enter between this purple band and this green band, it's like shooting fish in a barrel if you actually understand what's going on with crypto. Don't watch the headlines. Don't react when people say Bitcoin's crashing, whatever. Like, you'll even see the mayhem that's happening right now, even with this pullback in the market. Imagine what happens if this goes back down to 75K. People are going to lose their minds because they're not looking at Bitcoin in the cyclical nature that they should be looking at it. They're treating it like a gambling vehicle. They're using meme coins. They're just buying meme coins at high points in the market and then getting wrecked when there's any sort of pullback. I don't look at it from that perspective. I'm looking at it as the long-term sort of on-chain investor that's just looking at, these are the cycle lows. Here are my projections based on a few on-chain and technical pieces that lead me to believe that we should be able to generally get a 700% move over the next 4 or 5 years. What coins can I then find that fit into a general narrative to be able to buy at the rock bottom, flip for 10x, 15x, sell it when we reach these values, sit on cash, and then be able to reallocate time and time again? And if you start looking at crypto like this, I really, really promise you it's going to be much better, and you're going to be miles ahead of people. If you're watching this YouTube video, you're going to be miles ahead of people who don't ever talk about anything like this. That's what drives me, really, is just getting this point across. These are the fundamental pieces of analysis that I'm doing on chart. Now, as far as on-chain metrics themselves, okay, I talked a little bit about using glass nodes. I use something called the MVRV. Okay, I know this is starting to get a little bit more advanced, right? I wanted to sort of warm you up in the video, and now I'm going fully in to just show you everything that I'm doing detailed wise. But this is showing us the profit ratio of the long-term holders in Bitcoin. So the people that are holding coins for over 155 days statistically know the better times to be able to buy the bottom and sell the top. These are people who understand these market cycles and are only selling and buying off of that. The short-term holders, people who just started buying Bitcoin, tend to be the exit liquidity for these people. So what I'm looking at is the market value, realized value of these longer-term holders, and you'll see every time we enter this red band, the MVRV ratio for the long-term holders has always been in this red band, right? Except for this cycle high here, right? And this is a diminishing value, right? But you'll see even this green line here has basically always told us this is a good time to buy into the market, and generally close to or in this red band has told us that we are nearing the cycle high. So once Bitcoin gets at least sort of near this level, right, I'll start watching out for the top. We haven't even come to that level yet. And fundamentally, the larger the cryptocurrencies, market cap wise, the way more money that needs to be added into it for it to even double. Like for Bitcoin to double, we have to see nearly $2 trillion more dollars enter the market. Or if you look at something like Aerodrome, this has 1.1 billion in market cap, in which case, if this hits 5 billion, 10 billion, that's a 5 to 10x even from the prices here, in which case it takes a lot less total capital in order to get these large returns. Where if you get a 10x on Bitcoin, you literally need $18 trillion to enter the market. So understanding the relative size of market caps is going to allow you to build out portfolios. And the smaller the market cap, usually the more risk, but the more upside. The larger the market cap, the lower the risk, but the lower the upside. Okay, and so you can build out portfolios this way. And I'm going to show you in a second how to build out portfolios. All right, but let's step into the world of technical analysis for a second. And let's see, for technical sake, how we can start evaluating the market. So there's a few key things that I want you to take away. Okay, the first are going to be trend lines, right? So anytime we're seeing the price bounce off an invisible level or seemingly invisible level, this is going to fall back into our trend analysis, but we can see there are all sorts of different trends going on in the market. All right, you'll see, so this was following an uptrend. You'll see bounce point here, bounce point here, bounce point here. This is following a downtrend, bounce point here, bounce point here, bounce point here. Now, when something like this happens, the price basically has to decide whether the sell pressure to the downside is going to beat the buy pressure to the upside. But typically, once something breaks out of these upper trends and retests the overside right here, that's the last point before you get a crazy reversal in the market, okay? All right, and this is exactly what I did when I bought into my Doge position. And by the way, I did this in real time. I can show you the position. This is not made up. You see resistance, resistance, resistance. We had our uptrend forming off of these lows. Price finally breaks up above it and has this complete sell-off. Kicks down onto the upper side here. I was able to enter my position, and that's the last time that it came down to that level before we had a massive run-up and continuation, hopefully to continue into the market. Okay, I love Dogecoin. I don't plan to sell it until the end of the cycle. Whatever happens, happens, but it's a good trade so far, just to sort of show you that trend analysis. So trends are huge to understand when things are likely to either continue or to end. So another good example is when trends break. So we have this low point hit, this low point, this low point, this low point. Price finally breaks underneath it because it has enough sell pressure to break underneath the trend. It retests the other side of it before having a massive move to the downside. All right, there's another trend here where you can see test, goes through it. That's where it starts to move sideways and then eventually up. You'll see Ethereum has started to make a trend line along these low levels here. All right, so what I like to do is have most of the price sort of agree with one line, and this is going to show you the lower range of this current uptrend Ethereum's been following essentially for years. As far as reading trends and understanding where we are, I use another thing called Elliott wave theory. And this is basically the psychological theory that tells us that trends tend to move in 5 wave cycles, all right, followed by what's called an A, B, C correction. All right, and this ties into human psychology. I have a whole technical analysis guide that talks about this exact concept that I'll link at the end if you really want to drill into how I do technical analysis. But basically, we can use this to figure out how much higher we can expect the market to go. And we can use this in conjunction with something called Fibonacci to make sure that we're entering at key levels. And I'll show you examples of me doing this in real life. So let's go back to this first run up in Bitcoin, right? All we really need is to be able to identify a 1, 2. And as soon as we have this 1, 2, we can then start to figure out where the potential high of the trend could possibly be by using something called trend-based fib extension. Okay, this is available right on TradingView. All you have to do is click at the base of your trend before the price really starts moving, click at the high of your first one, and then go back down to the equal level of where you started. All right, and you'll notice that's going to give you a 161.8 value, a 261.8 value, 361.8, and so on. And so basically these values come off of what's called a Fibonacci retracement. And Fibonacci is a naturally occurring ratio, which for whatever reason is the code that is hardwired into nature. And a lot of times these charts will follow this golden ratio, which is this 0.618 ratio. And so these multiples are just multiples of that golden ratio. So if we find our distance after our first push, oftentimes this 161.8 or 261.8 in conjunction with a 1, 2, 3, 4, 5 move, depending on how many waves we have, whether this will be a 261.8 or 161.8 high of trend. So in this situation, the 161.8 happens as we have 1, 2, 3, 4, and 5 established before we then get an A, B, followed by a C correction, which should come down to this 61.8 golden ratio. And if we play this forward, you can see price came down, forms the B wave, comes down perfectly to touch this exact 61.8 value before taking taking another run up at highs. All right, so when I'm looking at cycle mapping as a whole, if I consider this my 1, 2, potentially 3, 4, up to 5, something like this, all right, if we can expect about 532 days after the halving period, this is our 1, 2, 3, 4, up to 5. This 26018 projection would bring us up to about 168,000. If we then turn on our terminal value, this continues to move over something like this, and the price ends up meeting us up at this value. Depending on how this wave structure comes into play, can give us some sort of general consensus as to where we can expect the top to come in on. So using all of these things in conjunction can really allow you to time the market, get in at really critical levels as you really know it, and be able to position yourselves to be able to compound money like crazy. All right, so let's get into section number 5, which is various ways you can make money in crypto. So for long-term investing, this is basically using this cycle mapping to be able to enter at key parts of the market, diversify risk over different holdings, and be able to buy and sell between cycles. All right, and this should include some sort of level of diversification that is sort of congruent with the amount of risk that you want to take, assuming that you want to take less risk as you scale the capital and take on more risk as you're just beginning the process with a smaller amount of money. Okay, so I've positioned out sort of a framework that I followed when I first started investing in crypto that has a high risk portfolio, mid risk, and then low risk portfolio, and how much to allocate into low risk, medium risk, and highly speculative cryptocurrencies, and how much to put into each allocation. All right, this is also in the tool resource if you want to play around with this, as well as the overall strategy that I'm using for the cycle and some of the projects that I'm holding in this sort of portfolio structure. All right, so the next way is swing trade, which are basically shorter term trades that you plan to hold just for several weeks or months. Okay, I started to steer a little bit away from that just because as you scale capital, if you buy and sell within the same year, you're paying short-term capital gains. So anything that I'm doing now at this point, I'm trying to do at the beginning of cycles and then sell afterwards. But that is largely the way that I scaled my portfolio in the very beginning. Okay, taking swing trades on Dogecoin, for example, I bought in with a couple $1,000 near 4 cents, was able to get, for example, nearly a 10x out of that, sold that within the next couple months, and then reallocated into other things. So swing trading is another way to make money. All right, and then the third way that I'm doing on a more regular basis, regardless of the direction of the market, whether things are good or bad, is day trading. So for example, this trade that I showed you, I can take several of these trades in a single day. And if you watch my other content, I'll have $3,000-$4,000 profit days, which then if I want to invest it into crypto and start this process, I can. If I want to supplement my income or take the money out, that's also on the table. Okay, we have multiple ways of trading and using this analysis. So you can see sort of this technical analysis come to fruition as well. We have a trend break, right, where price bounces off of it, comes up above it, tests that exact opposite side before getting a massive push up in price, which is why I wanted my take profit level up here. And you can see price moved up and I was able to make a nice juicy profit off of that, just reading this general analysis as well. And that only took, say, 45 minutes. That's what I'm focusing on a lot of times. But understanding this all as a collective is going to put you in a position to start, be able to get a 3x, start again, be able to get a 3x, start again, be able to get a 3x, start again, be able to get a 3x. If you have patience to do this over, say, 15 years, you can really start with, say, for example, $3,000 and turn this into a pretty large sum of money. And you don't need to be a genius. You don't need to hit it big on one trade, get lucky. You just need to understand the upside of this market, understand how to do this in general, and start applying all of these things that I showed you in this video. Like I said, if you found value in this, make sure you share this with someone. Okay, make sure you like the video, subscribe if you want to follow along and be notified when I drop other content. I'm going to put a playlist of more analysis right here. If you want to check out our private team and take trading more seriously, you can check it out right there as well. Follow me on Instagram, DM me the word tools, and you'll have access to all of the things that I showed you on screen and more. You can check out the links in the description. Let me know in the comments what you like the most. Until next time, I will see you all in the next video.